Your financial X-ray understanding statements for massive gains. Alright, so here's a shocker: mastering financial statements isn't just for finance pros. It's your secret weapon for financial success, and it's simpler than you think. Forget the jargon. Think of it as learning a new powerful language, and I'm here to be your personal translator today, making it super easy. Most people see these documents and their eyes just glaze over, but trust me, once you get the hang of it, it's like having X-ray vision into a company's health, or even your own financial situation. It's a total game changer, and I'm excited to break it all down for you. Ever felt lost looking at a company's numbers? Maybe when you're thinking about investing or even just trying to figure out if a business is legit? Wondered what assets versus liabilities or net profit tells you about what's going on under the hood? Are you potentially missing out on crucial insights that could boost your investments, help you grow your own business, or just make you way smarter with your money? If that sounds familiar, you're in exactly the right place, because we're going to clear all that confusion up right now, and it's going to be incredibly valuable. In this video, I'm demystifying the core financial statements, the balance sheet, the income statement, the cash flow statement, and even the statement of shareholders' equity, plus those often overlooked notes. You'll learn not just what they are, but how to read them, how to understand them, and most importantly, how to use them to your advantage. This isn't just boring theory, this is practical, actionable knowledge that builds real financial confidence and can genuinely change your financial future. So if you're ready to level up your money game and stop feeling intimidated by numbers, stick with me till the end. You won't regret it. The balance sheet, your financial snapshot. The balance sheet is a snapshot of a company's financial position at a specific point in time. It shows what a company owns, assets, what it owes, liabilities, and the owner's stake, equity. The fundamental equation is assets equals liabilities plus equity. Think of it like a financial selfie for the company. It's crucial for understanding a company's financial health. If it doesn't balance, something is wrong. Now, let's dive into those components. The income statement tracking profits and losses. Alright, next up is the income statement, also known as the profit and loss statement, or P&L. If the balance sheet is a snapshot in time, the income statement is like a video. It tells you about a company's financial performance, like a quarter or a full year. This is where you find out if the company actually made any money or if it lost money. It's all about revenues, expenses, and ultimately, the bottom line net income or net loss. This statement is crucial for understanding a company's operational efficiency and profitability. Think of it like this. The income statement is the report card for a business over a certain term. It shows how much money the company brought in from its sales or services. That's your revenue or sales right at the top. Then, it subtracts all the costs and expenses incurred to generate that revenue. This includes things like the cost of goods sold, COGS, operating expenses like salaries, rent, marketing, research and development, and also interest expenses and taxes. What's left at the very end is the net income, or the profit. The core idea is simple. Revenue minus expenses equals net income or net loss. If revenues are higher than expenses, congratulations, the company made a profit. If expenses are higher than revenues, well, that's a net loss, and that's generally not what you want to see consistently. The income statement breaks this all down line by line so you can see exactly where the money came from and where it all went during that period. It's a story of the company's operational journey for that time frame. For a relatable analogy, imagine you run a lemonade stand for a summer. Your income statement for the summer would start with all the money you collected from selling lemonade. That's your total revenue. Then you'd subtract the cost of lemons, sugar, cups, that's your cost of goods sold. Then you'd subtract any other expenses, like maybe you paid your little brother to help, salaries, or you paid for a small sign, marketing. After you subtract all those costs from your revenue, whatever is left is your profit from the lemonade stand for that summer. That's your net income. This lemonade stand example perfectly illustrates how an income statement works. Chapter 3. Let's dive into the cash flow statement. Cash is king. It shows actual cash movement in and out. A company can be profitable but still struggle without cash. This statement bridges that gap. It tracks changes in cash balance over time, divided into operating, investing, and financing activities. It's vital for assessing liquidity and solvency. Think of it like your bank statement. It shows all cash deposits and withdrawals. That's what the cash flow statement does for a company. Chapter 4. Let's talk about the Statement of Shareholders' Equity, also known as the Statement of Retained Earnings. This statement explains changes in the equity section of the balance sheet over time. Equity represents the owner's stake in the company. Think of it as a bridge. It shows the equity at the start and end of the period. It details what happened in between. Did the company issue new stock? Did it buy back its own shares? How much net income was generated and paid as dividends? This statement answers those questions. It reconciles beginning and ending equity balances. It shows how components like common stock and retained earnings have fluctuated. For investors, it's key to understanding their ownership share. Chapter 5. Alright, last but definitely not least, we have the notes to financial statements, sometimes called footnotes. Now, I know what you're thinking. Ugh, the fine print, that sounds boring. But trust me on this one, the notes are where a lot of the really juicy details are hidden. The main financial statements, balance sheet, income statement, cash flow, provide the numbers, but the notes provide the narrative, the context, and the explanations behind those numbers. Ignoring them is like reading a book summary instead of the actual book. The notes are an integral part of the financial statements, and they are absolutely essential for a complete understanding of a company's financial health and performance. They provide additional information that can't be conveniently placed in the body of the statements themselves. This includes things like the specific accounting policies the company uses, details about its debt, information on pending lawsuits, explanations of significant estimates, and breakdowns of certain line items. Seriously, this is where you find the good stuff. Think of the notes as the director's commentary on a movie. The movie itself, the financial statements, gives you the main story, the action, the drama. But the director's commentary, the notes, gives you the behind-the-scenes insights, explains why certain decisions were made, clarifies confusing plot points, and provides extra context that enriches your understanding of the whole film. Without the commentary, you might miss crucial details or misinterpret what you're seeing. Here's another way to think about it. Imagine you buy a complex piece of equipment, like a high-end camera. Outro. Alright, so there you have it, a complete rundown of the major financial statements, the balance sheet, the income statement, the cash flow statement, the statement of shareholders' equity, and those all-important notes. We've covered what each one tells you, used some analogies to make it stick, and I've given you some quick tips for each. Remember, the balance sheet is your financial snapshot. The income statement tracks your profit performance over time. The cash flow statement follows the actual cash. Shareholders' equity shows changes in ownership. And the notes give you the crucial context. It might seem like a lot, but you've got the foundations now. This knowledge is seriously powerful. Understanding these statements isn't just an academic exercise, it's a practical skill that can help you make better investment decisions, manage your own business more effectively, or even just feel more confident when discussing financial topics. So, what's next? Start looking at the financial statements of companies you're interested in, or even try to sketch out a personal balance sheet. The more you practice, the easier it will become. And if you found this video helpful, please smash that like button for the YouTube algorithm. It really helps the channel out. Drop a comment below with any questions you still have, or what topic you'd like me to cover next. And of course, make sure you subscribe and hit that notification bell so you don't miss out on future videos designed to make you smarter with your money. Honestly, taking the time to understand this stuff puts you way ahead of the curve. Financial literacy is a journey, not a destination, but you've just taken a massive step forward. Don't be intimidated by numbers anymore. See them as a story waiting to be understood. As Warren Buffett says, accounting is the language of business, and now you're becoming fluent. So go out there, use this knowledge, and start making some smart financial moves. Thanks so much for watching, and I'll see you in the next video.